You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks again for having me.
Well, there's a good reason for people to subscribe to your newsletter. I'll just quote a bit here from your July 4th letter. The setup with the four-year cycle top is clearly underway. Consequently, the financial house of cards that has been created in association with the rally out of the 2009 low is now at risk of collapsing. When it does, the greatest financial deception of all time will be exposed. I cannot overemphasize the extreme danger associated with the current cyclical setup or the market's current vulnerability. The only question is whether or not this cyclical setup is solidified at this point, and if so, how fast it unravels. Well, earlier this week, we saw the biggest decline ever in the history of the Dow, and then the biggest climb back ever in the history of the Dow. Now, if that isn't a sign that this setup for the collapse is there, what is there? Can you maybe explain, Tim?
Yeah, when I look back at what I said there, like you said, the July issue came out, and of course the details, I think that's a 28-page letter or so with all the details. That was my opening statement. It's pretty profound, what I said, that it was on the brink of collapse. And the reason I said that is that, it's all about structure, and, we have now had, last Friday, and you guys have an article on that. There was a bearish primary trend change that was triggered. And, here we are. So, I think the wheels are in motion, but, obviously, I wrote that in July, and I was expecting exactly what we've seen here. And, we've known from some of the structure with the intermediate and term cycles that the market should have broken, pretty much done exactly what it did. Now, did I predict a 1,000-point down day? No, I couldn't put numbers to it, but I just knew the market was unhealthy, and I knew the structure was poor, and I, like I said, literally said that it was on the brink of collapse, and that is exactly what has happened. And the one thing that has bothered me, though, about this setup, back in 2000 and 2007 at the tops, I was pretty much alone, and I like being alone because it tells me I'm right. And at this top, there has been a lot of people talking about it. There's been a lot of people talking about, the entire global economy and how, they know something's not right, but maybe they don't know exactly why. But there's a lot of people sensing it. And I have that being in company with that has bothered me some, because typically the markets don't accommodate that many people. It tends to surprise more people. But that said, I think, maybe what people have been doing is they've sensed things weren't right. We got it with the technicals. So where do we go from here? I think the surprise and where it gets difficult now for people, even people that have, correctly knew that something was wrong, I think where it gets difficult now is navigating it. And, a lot, we're going to hear the cheerleading. We already have. I mean, the first down day last Friday, we were hearing all the reasons the stocks were on sale, and it was a good buying opportunity, and don't be emotional and make decisions about your long-term stock holdings based on one day. And we heard all the experts they pulled out, at least in the States, and they were on the financial channels. And these people are clueless. They're clueless. They're completely clueless about what's going on. Either that or they're outright liars. I don't know which. The latter, I guess, would be worse, to know and then lie, but I don't know. But, they didn't warn anyone of what was happening. They didn't see it coming, and if they did, they wouldn't tell you. And for anyone to listen to them now, no, there's issues, and the surprises coming is going to be false bottoms and false hopes. And as we move forward, we're going to hear the cheerleading. They're going to tell us everything's okay, and there's going to be some good rallies. There will be some good rallies, but and there will be convincing. And when everybody thinks the bottom is in, that's when it's not in. People have no idea what we face now, and it's just a matter of following it with the cycles, and the cycles will guide us through this minefield. And there will be tremendous opportunity, I think, for those that know what's happening and can somewhat time it.
Well, Tim, you've always been a favorite of Timer's Digest. You've been so accurate in the past. Now, oil dipped into the 30s briefly for a while. You said that to us 6 months. You said, don't be surprised, Jim, if it dips into the 30s.
I know, and it's just, that's the thing, is this work, Jim, it's about statistics and numbers and math. And you tell people this stuff, and sometimes it's a little further over the horizon than you think, but it's still valid. It's still numbers and statistics and math. And I made that call on oil based on math and like I said, statistical relationships. And I'll tell you, oil, we should be at some sort of a short to intermediate degree bottom. If it can get a toehold here, I'll know when a couple little things develop, if that low is in fact in place. But we're trying to make one. And if it does, it's another counter trend bounce, and then it's going lower. And this stuff, my point is people, and I don't want to offend anyone, but you got to be honest with yourself. How many times you tell people stuff, they go, I don't believe that. Well, why? Because you choose not to, or because you refuse to hear the facts, or based on some bogus information or some. Why do you refuse? People want to hear what they want to hear.
I had an emergency planning expert tell me once, he said he has read emergency plans from across Canada and the U.S., and he said in that plan, they use words like, we hope this happens. And he said, well, I'll tell you something, Jim, hope is not a plan.
Exactly. And I said during the rally out of the 2000, I think I started the phrase, and I've quit using it. I need to bring it back. But the rally out of the 2002 low into the 2007 high, I talked about the hope and hype, and that's what it was based on, and that's really where we're going back now. We're going back to hope and hype, and I guess my point is it's real simple. People just they don't want to believe what they don't want to believe, and you tell them some of this stuff, and they think you're the idiot. But it's all proven out. It's all coming true. We said $30 oil, and now I think that it's probably even going lower than that. I don't think this thing is done with commodities. We're just seeing the crack with equities. It hasn't even begun to get ugly. And they're like I said, the warning here is that there will be false bottoms. They will cheerlead. And even when the experts think we have the bottom, we don't have the bottom.
Tim, what do you expect is going to happen, and what's the best advice you can give people?
You just don't want any exposure to equities over the, I say long haul until we get to the 4-year cycle bottom. That is just it's going to be brutal. And people talk about, one thing they say is well, I'm in it for the long haul, and the markets always come back, and it'll be okay. Really? Yeah, they manufactured the advance. They saved the market coming out of the 02 low, and able to manufacture it and push it through, all the liquidity infusion and all the stuff that we saw that created the worst financial crisis since the Great Depression, and they managed to push to a new high, and then it collapsed to a new low. And then we have this advance, and what if it doesn't come back this time? What if it's like 1920, the crash after into the 1932 low? I think it took 20, I don't remember exactly.
24 years.
24 years, something like that, to get back to even. Exactly. And what if, they've shot all, I would virtually say they've just shot all their ammunition. What can be done now? And so you want to make that bet? Do you have 21 years in your investment? Why not take your marbles and stick them, if nothing else, under the mattress, so to speak, let the carnage play out, and then you got all your marbles to get back in when stocks truly are on sale. And but to ride something like that, to stand in the train tracks and be run over, hey, your money. But and I have people tell me. I had a guy call me yesterday, and he was confirming some stuff with some of the cycles work and what I'm seeing. And he said he was talking to his brokers in complete denial. And he told him, he said, yeah, well, nobody can time the market. And I don't mean to sound arrogant, people. Please don't think it that way, because I'm not. But that's a foolish statement, because I did get, in fact, the 2000 top right, the 2007 top right, the housing top right, the commodity top right, and this one. And when you say, yeah, well, you've been bearish all along. Yes, I've been bearish all along because I knew what was going on, but I didn't call a top all along. I said the rally would continue until we got our DNA markers. And so, again, yes, you can time it, and you may not can time it perfectly to the day, but you can time it, and you can know what's going on. And like I said, now the danger is going to be navigating it and understanding where the bottom really is. And I got answers to that too, or at least I think I do.
We'll have more with Tim Cyclesman Wood right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Tim Cyclesman Wood. Just before the break, Tim, you said there are ways to navigate which looks like a train wreck, the Titanic and the Hindenburg all at once. How do you get around that pileup?
Well, if you know the train's coming, you get off the track because you don't want to be run over. And then when the train passes, you can get back on. We know that there's going to be ebbs and flows in this thing. We know there's going to be intermediate and longer term cycle tops and bottoms along the way. And so we know the rhythm of the market. We have statistical expectations that are going to guide us as far as the price projections and so on and so forth. So we have tools, and it's all based on math, just like, the same stuff that was used to with oil, and the same stuff that was used to identify this extended 4-year cycle top and the brink of collapse and the whole thing. All this stuff works. And now the tools will be used to navigate the minefield, so to speak. And it's just a matter of following the cycles and navigating what they're telling us.
Now, Tim, you were telling me earlier you used to do a lot of the financial television networks, and then all of a sudden one day when you came up with, hey, there's trouble ahead, they banned you from appearing. Have you been on any financial TV shows lately?
No, I have not. And what that story was I was trying to get on CNBC. And back in the day, that was when I made the call and was published in 2000 with on the 2000 top in Stocks and Commodities magazine. And I called based on statistics, right there near the top. I mean, I saw the market set up, the industrial set up in January, the S&P set up made the top in March of 2000. And I identified it based on DNA markers and statistics. That one was a gift. That one was so easy. And made the call and said, we're going below the 1998 low. That's in print. It's in a major magazine. Got the cover with Greenspan holding a flat tire, talking about the market deflating. Got the cover story, Stocks Commodities magazine. And it's just based on math. And I was trying to get on CNBC to get that some exposure, and talk to one of the people there. I'll remain nameless, but he told me, he said, man, I cannot have you come on and say the things you have to say. And so I know firsthand that these people, they don't want to hear it, and they may throw a grain of truth out there every now and then, but to cover it up, and they have the rebuttals, and they kind of try to sweep it under the rug. But if you think back, and I don't mean to crack on the mainstream media, but I have to, because did they tell you about the 2000 top? Did they tell you going into 2007 that they were creating the worst financial crisis since the Great Depression? Did they even Greenspan himself denied the housing bubble that Stevie Wonder could have seen. Did they tell you, they were talking about peak oil back in 2008. Did they warn anybody of that top? Did they tell you on July the 4th that this advance was on the brink of collapse? No, they did not. And those idiots aren't going to they didn't tell you this time, and they're not going to be able to tell you what's ahead. All they're going to tell you is the party line that everything's okay, buy the dip, and the economy's strong. So I guess that's the other warning is, You believe them if you want, but you've been warned.
Well, I was going to say, that's the equivalent of going out and shooting Paul Revere's horse as he plans to start screaming through the streets of Boston, the British are coming. That's what they did to you. You know, you've been the Paul Revere.
Yeah, I know. And I, like I said, it's just frustrating. If I sound frustrated, it's because I am. I get irritated with those guys because here's the thing. You know, you're playing with people's, you know, with their nest eggs, with their retirement, with their, you know, that's the source of the frustration. Stand in my shoes and understand the angle of my frustration. And I see what I see. I know what I know from the statistics. I know this stuff works. You know this stuff works. I know what I know. And then you got some nincompoop on TV telling everybody everything's going to be okay. And then this guy gets his information off of TV thinking he's listening to an expert. And then he's wiped out. And then look how that affects his future, his life, his family, and so on and so forth, because he listened to some idiot on CNBC. That's my source of frustration with these people.
Tim, I know this is going to be the great continuing story for those who follow financial markets. As I pointed out to people, if they'd been listening to my guests, Tim Cyclesman Wood and others, where you said usually you're all by yourself, the lone voice in the wilderness, you have not been. And I said what happened on Monday and Tuesday. Everybody else is running around like this is a surprise. This is a shock. And I'm going, I am not surprised. I am not shocked. If people have been listening to our interviews, they would have been prepared for this. It would not be a surprise.
Exactly. And now, like I said, the other point I want to drive home is that now the problem is going to be people are going to think, look, as we move into some of these cycle lows that I know, you know, we have statistical timing bands. We have expectations. We know when and where approximately they should occur. And, of course, it's a process of ultimately identifying the low as you move into the low. You kind of got to work several ends to the middle. I mean, you can't just go out there and give a date and go, okay, this is it. I mean, you have expectations, and then you follow the market, and then you watch the developments, and then you identify it. But as we move into these intermediate degree, let's call them lows along the way, and we rally out of it, I'm telling you, the danger is going to be, they're going to tell us that we've seen the worst. You know, if we melt down here, let's say we go down 20-25%. People, and can you imagine the cheerleading, and then you get a strong rally out of that say it lasted a couple of months, man, it would be so frothy. People be so convinced, oh, we got the bottom, that was great, and buy the dip, buy the next dip, buy the dip. I'm telling you, it's a trap. It is a trap. And that is going to be the hard thing to navigate going forward if you don't understand what's happening.
Tim, obviously your newsletter has helped warn people about this. I know you told me what you were so concerned about was people losing their retirement income. How can people subscribe to your newsletter?
Cyclesman.com. I mean, the research is there, cyclesman.com, and, you know, I realize that I'm not here to convince anybody of anything. You know, people are free to believe what they want to believe. The material works. If you choose to believe it, that's great. If you choose not to, that's great too. But, you know, it's solid research based on statistics and technical analysis and cyclical behavior. And, you know, it might be worth at least looking at the material to at least consider it.
Thank you so much, Tim.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. You have to check out our very popular YouTube channel, Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments about the show can be sent to info@howstreet.com. And if you have any questions for our experts like Tim Cyclesman Wood, you can send them to info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.